you look at the ASEAN markets in 2022, they were relative outperformers. And we would expect the same for much of 2023, especially the first half. I think a couple of reasons for this, but the biggest is the fact that the macro backdrop we think will remain very favorable. So, making ASEAN a bit of a defensive harbor when we're talking about recession in advanced economies. And the macro underpinnings are really being held up by a few key things. One is, we still have the reopening tailwind. It is fading, but it's still showing up in corporate earnings, which are very strong. And that's making valuations for ASEAN markets look very attractive. And the growth rates for 2023 remain attractive as well. Some other, supports for the market. Intra-ASEAN trade remains very strong, and that's a big driver for a lot of the regional economies. So even if major trading partners like EU, US, China slow down, intra-ASEAN trade should help buffer that impact. FDI is extremely strong. You saw a record year for many countries in 2022, Malaysia included. We expect that to continue as supply chain relocation remains a structural thematic for the region. And I guess the last but not least, as you've been talking about already earlier in the show with the BOJ, et cetera, monetary policy in ASEAN has been fairly moderate in terms of tightening compared to advanced economies and developed economies. So we think that policy sort of stance will remain in place in 2023, and that will be supportive of growth as well.
Mr. Pathmakanthan, this is JP Ong. I do want to stay on that point where you brought up monetary policy, because the question is facing Southeast Asia, especially emerging markets like Malaysia and others, is whether or not to keep in lockstep with the Fed in terms of those rate differentials. Now, we've heard contrasting views. The BSP in the Philippines has said, hey, you know what? We have to stay in pace with them at all costs. We heard from the Bank of Thailand before saying, it's not that important. And so far, they've been justified. I want to get the Malaysian point of view, because we haven't really talked about the Bank Negara Malaysia and Malaysian markets' point of view with regards to that rate differential. How important is it, in your point of view, or in your opinion, to stay in lockstep with the Fed? Or is this something that Malaysian markets need not worry about as much as, say, their other counterparts in the region, sir?
Yeah, I would say more the latter. As you rightly point out, countries like the Philippines and Singapore as well have to move pretty much in lockstep with the Fed. But countries like Thailand and also Malaysia have a little bit more leeway in terms of how fast you want to tighten. Yes, the currency will take some of this, moderate policy tightening in terms of weakness. But I think we're ready to tolerate that because, in terms of corporate indebtedness, federal or government indebtedness in foreign currency, it is minimal. Yeah, we're not exposed in that way to currency weakness. Also, I think, I think one key differential for ASEAN compared to many parts of the world is we have a lot of fiscal safety nets when it comes to prices for food and energy. In Malaysia, it's a classic example. We have subsidies for a lot of food items, and especially petrol. Petrol is still 40% below market price at the subsidized level. So the question really is not so much, interest rates going up dramatically. That won't happen. Bank Negara has been very clear that they will tighten, but in a moderate manner and with an eye on growth. And the headline inflation rate is still 3% plus, which is pretty much in line with what Bank Negara is targeting anyway. The real action, and this links back to what's happening politically as well with the Anwar government coming into power, is whether we can sustain those subsidies and keep inflation under check and therefore allow interest rates to remain relatively low compared to other parts of the world. And I think that's something that, we will see some changes in this year, the subsidy regime, and we'll have to assess the impact on inflation when that happens.